February 3rd Social Security deposit. Who gets paid? The February 3rd Social Security deposit is approaching, and if you've been checking your bank account wondering when your money will arrive, this breakdown is for you. Because not everyone receives their payment on the same date, and February 3rd applies to a very specific group of beneficiaries. The Social Security Administration operates on a structured payment calendar. It is not random, and it is not flexible based on personal preference. Your payment date depends primarily on two factors: when you started receiving benefits and what type of benefits you receive. For most retirement and SSDI beneficiaries today, payments are based on birth dates and arrive on Wednesdays, the second, third, or fourth Wednesday of each month. But February 3rd does not fall into that Wednesday structure. Instead, February 3rd is reserved for a special category of recipients. If you began receiving Social Security benefits before May 1997, you are in this group. If you receive both Social Security and Supplemental Security income, you are also included. And if you live outside the United States while receiving benefits, February 3rd is your designated payment date as well. That means this payment date primarily affects long-time beneficiaries. In the next section, we'll break down exactly how the standard payment schedule works, so you can confirm whether February 3rd applies to you or not. Part 2. How the Social Security payment calendar really works. To understand whether February 3rd applies to you, we need to clearly explain how the Social Security payment calendar is structured. For most retirement and Social Security disability insurance recipients today, payment dates are based on birth dates. This system was implemented decades ago to spread payments throughout the month and reduce processing congestion. Here's how it works. If you were born between the 1st and the 10th of any month, your payment arrives on the second Wednesday of the month. If your birthday falls between the 11th and the 20th, you receive payment on the third Wednesday. And if you were born between the 21st and the 31st, your payment arrives on the fourth Wednesday. That covers the majority of modern beneficiaries. But there is an important exception, and this is where February 3rd becomes relevant. If you began receiving Social Security before May 1997, you were grandfathered into the older system. Under that structure, payments are issued on the third of each month, regardless of your birth date. This group represents longtime beneficiaries who entered the system before the Wednesday schedule was created. In the next section, we'll take a closer look at the specific categories included in the February 3rd group and clarify exactly who qualifies. Part 3. The Special February 3rd Payment Group. Now let's clearly define who actually qualifies for the February 3rd Social Security deposit, because this is where confusion often begins. This payment date is not based on your birthday. It applies to specific categories of beneficiaries. First, if you began receiving Social Security retirement or disability benefits before May 1997, you are automatically scheduled to receive your payment on the third of every month. You were enrolled under the original system before the birth date Wednesday schedule was introduced, and your payment date remains fixed. Second, individuals who receive both Social Security and Supplemental Security income, often referred to as dual beneficiaries, are also paid on the third. This coordination simplifies processing between the two programs. Third, beneficiaries who live outside the United States typically receive their payments on the third as well. This standardized date ensures consistency across international banking systems. If you fall into one of these categories, February 3rd is your designated payment date, and because February 3rd, 2025 falls on a Monday, payments should process normally without weekend or holiday adjustments. In the next section, we'll address the headline number many people are asking about: who actually receives $2,100 or more, and what determines that amount. Part 4. Who actually receives $2,100 or more? Now let's address the number that's getting the most attention: $2,100 or more. Not everyone receiving a February 3rd payment will see that amount. The actual deposit depends entirely on your individual earnings history, the type of benefit you receive, and any applicable deductions. For retirement beneficiaries, your payment is based on your highest 35 years of earnings, adjusted for inflation. The Social Security Administration calculates what's called your primary insurance amount using a specific formula. In 2025, the maximum retirement benefit at full retirement age is approximately $3,956 per month. However, Very few people qualify for that maximum because it requires consistently earning at or above the taxable wage base for at least 35 years. The average retirement benefit in 2025 is around $1,176 per month, significantly below the maximum. So how does someone reach or exceed $2,100? Two major factors increase payments: strong lifetime earnings and delayed claiming. If you waited beyond full retirement age, up to age 70, you earned delayed retirement credits worth roughly 8% per year. That can significantly boost your monthly check. For higher earners who delayed claiming, a $2,100 payment is not unusual at all. In the next section, we'll break down SSDI payments and explain how disability beneficiaries can also reach that 2,000 plus range. Part 5. SSDI benefits. How disability payments can exceed $2,100. Now let's turn to Social Security Disability Insurance, or SSDI, because many disability beneficiaries are also wondering whether that $2,100 figure applies to them. SSDI is calculated differently than needs-based programs like SSI. It is not based on your current financial situation. Instead, it is based entirely on your work history and earnings record before you became disabled. In 2025, the average SSDI benefit is approximately $1,483 per month. But just like retirement benefits, that is only an average. Individuals who had higher lifetime earnings prior to their disability can receive significantly more. In fact, the maximum SSDI benefit is essentially aligned with the maximum retirement benefit at full retirement age. That means individuals with strong earnings histories can absolutely receive monthly payments above $2,100, sometimes well above. There's another important factor many people overlook: family benefits. If you are receiving SSDI and have eligible dependents, such as a spouse or minor children, they may qualify for auxiliary benefits based on your record. Social Security sets a family maximum, but total household benefits can easily push beyond $2,000 per month when dependents are included. So again, the $2,100 number is realistic, but only for certain beneficiaries with qualifying work histories or dependent benefits. In the next section, we'll examine how the 2025 cost of living adjustment plays a direct role in boosting current payment amounts. Part 6. How the 2025 COLA increase affects your February payment. Another major reason some beneficiaries are seeing higher payments this year comes down to one key adjustment: the 2025 cost of living adjustment, or COLA. For 2025, Social Security benefits increased by 2.5%. That adjustment officially took effect with January payments, and it continues to apply to every monthly deposit moving forward, including the February 3rd payment. Now, 2.5% may not sound dramatic at first glance, but when applied to larger benefit amounts, the increase becomes meaningful. For example, if you were receiving $2,000 per month last year, a 2.5% COLA adds an additional $50 per month. That brings your new monthly benefit to $2,050. If you were already near $2,100, that adjustment alone could push you above that threshold. For higher earners receiving $3,000 per month, the increase would be about $75 monthly. Over the course of a year, that adds up to $900 in additional income. The purpose of COLA is to help Social Security benefits keep pace with inflation. It's tied to changes in the Consumer Price Index and is designed to preserve purchasing power. For longtime beneficiaries, especially those in the February 3rd payment group, this adjustment is already built into your current benefit amount. In the next section, we'll break down why your bank deposit might be lower than your official benefit amount, even if your gross benefit exceeds $2,100. Part 7. Why your bank deposit may be lower than expected. Now let's talk about something that surprises many beneficiaries every single month. Even if your official Social Security benefit exceeds $2,100, the amount that actually lands in your bank account may be lower. That difference usually comes down to deductions, and the most common one is Medicare. Most Social Security recipients have their Medicare Part B premium automatically deducted from their monthly benefit before the payment is deposited. In 2025, the standard Medicare Part B premium is $185 per month. So let's break that down clearly. If your gross Social Security benefit is $2,100 and $185 is deducted for Medicare Part B, your net deposit would be approximately $1,215. That's the number you would see in your bank account, And for higher income beneficiaries, there may be additional Medicare costs. If your income exceeds certain thresholds, you may pay what's known as IRMA, income-related monthly adjustment amount. These additional charges increase your Medicare premium and further reduce your net Social Security deposit. This is why understanding the difference between gross benefit and net deposit is critical. The headline number may look impressive, but what truly matters for budgeting is the after-deduction amount. In the next section, we'll examine another factor that can lower your monthly deposit: federal and state tax withholding. Part 8. How tax withholding can reduce your payment beyond Medicare deductions. There is another factor that may lower the amount you actually receive on February 3rd: taxes. Many beneficiaries do not realize that Social Security benefits can be taxable depending on your total combined income. Combined income includes your adjusted gross income, any non-taxable interest, and half of your Social Security benefits. If that total crosses certain thresholds, a portion of your Social Security may be subject to federal income tax. The Social Security Administration gives you the option to have those federal taxes withheld directly from your monthly benefit. You can choose withholding rates of 7%, 10%, 12%, or 22% of your benefit amount. For example, if your gross monthly benefit is $2,100 and you elected 10% federal tax withholding, that would reduce your deposit by $200 before it even reaches your bank account. Combine that with the $185 Medicare deduction, and your net deposit could drop significantly below the headline figure. State taxes are another consideration. Most states do not tax Social Security income, but a handful do. Each state has different income thresholds and exemption rules. If you live in one of those states, that could affect your overall financial picture. In the next section, we'll explain what working beneficiaries need to know about the earnings limit and how it could temporarily reduce payments. Part 9. Working while collecting. Understanding the earnings limit. If you are still working while collecting Social Security benefits, there is one rule you absolutely need to understand: the earnings test. This rule only applies if you are under your full retirement age. Once you reach full retirement age, the earnings limit disappears entirely. But before that point, your income from work can temporarily reduce your monthly benefit. For 2025, if you are under full retirement age for the entire year, the annual earnings limit is $23,400. If you earn more than that amount, the Social Security Administration will withhold $1 in benefits for every $2 you earn above the limit. Let's break that down with a simple example. If you earn $25,400 in 2025, that's $2,000 above the limit. Social Security would withhold $1,000 in benefits over the course of the year. Now, here's the important part. Those benefits are not permanently lost. Once you reach full retirement age, your benefit is recalculated. Social Security adjusts your monthly payment upward to account for the months when benefits were withheld. In other words, it's a delay, not a penalty. Understanding this rule prevents confusion if your February 3rd deposit appears lower than expected. In the next section, we'll discuss practical steps you should take to ensure your payment arrives smoothly and without delay. Part 10. Steps to ensure your February 3rd payment arrives smoothly. As February 3rd approaches, preparation is your best protection. If you are part of the special payment group, those who began receiving benefits before May 1997, dual Social Security and SSI recipients, or beneficiaries living abroad, there are a few important steps you should take right now. First, verify your direct deposit information. If you have recently changed banks, opened a new account, or closed an old one, you must update your information with the Social Security Administration immediately. Incorrect banking details are one of the most common causes of delayed payments. Second, log into your My Social Security account at ssa.gov. This free online tool allows you to confirm your gross benefit amount, review your payment history, and check your scheduled payment date. It also gives you access to your benefit verification letter and your most recent COLA notice. Third, monitor your account on February 3rd. Most major banks process Social Security deposits early in the morning, sometimes just after midnight. However, smaller banks and credit unions may post deposits later in the business day. If your payment does not appear immediately, do not panic. Minor processing delays can occur. But if your deposit does not arrive within 3 business days, contact the Social Security Administration directly. In the next section, We'll examine how couples and representative payees should plan around the February 3rd schedule. 11. Part 11. Couples, dual beneficiaries, and representative payees. If you are married and both you and your spouse receive Social Security, understanding how your payments are scheduled can actually improve your monthly cash flow planning. Each spouse has an individual benefit record. That means your payment dates may not match. One spouse may receive payment on the 3rd of the month, while the other receives payment on a Wednesday later in the month, depending on when benefits began and birth dates. For some households, this staggered schedule is helpful. Instead of receiving all income at once, payments are spread throughout the month. That can make it easier to manage recurring expenses like rent, utilities, insurance premiums, and groceries without straining the account balance at one time. For dual beneficiaries, those receiving both Social Security and SSI, coordination is also important. Payments may be structured differently, and understanding which portion arrives on which date helps prevent budgeting mistakes. Representative payees have an additional responsibility. If you manage benefits on behalf of someone else, the February 3rd deposit will arrive in the designated account for that beneficiary. You are legally obligated to use those funds for the beneficiary's current and future needs. Keeping detailed records of spending is not optional. It is required. In the next section, we'll address one of the most critical topics around payment dates: protecting yourself from Social Security scams. 12 Part 12. Protecting yourself from Social Security scams. Around every major Social Security payment date, especially one like February 3rd that receives public attention, scam activity increases, and retirees are often the primary targets. It is critical to understand this clearly. The Social Security Administration will never call you and threaten to suspend your benefits. They will never demand immediate payment through gift cards, wire transfers, cryptocurrency, or prepaid debit cards. And they will never pressure you to provide your Social Security number or banking information over an unsolicited phone call. Scammers often create urgency. They may claim there is a problem with your February 3rd deposit. They may say your account has been flagged. They may even spoof official phone numbers to make the call appear legitimate. Do not engage. If you receive a suspicious call, hang up immediately. If you receive a suspicious email or text message, delete it. The SSA primarily communicates through official mailed notices. If they need additional information, it will be done through formal channels, not threats. Protecting your Social Security number is just as important as protecting your bank account. Identity theft can cause long-term financial disruption far beyond a single payment. In the next section, we'll look at why Social Security remains one of the most reliable income sources in retirement and why understanding your payment schedule builds financial confidence. 13, Part 13, the reliability of Social Security in uncertain times. In a world where financial markets fluctuate, interest rates rise and fall, and economic headlines change daily, Social Security remains one of the most reliable income sources for millions of Americans. That reliability is not accidental. The program operates on a structured payment schedule that has been refined over decades. Whether your payment arrives on February 3rd, the second Wednesday, or another designated date, the system is designed to function consistently month after month. For many retirees, Social Security represents the majority of their monthly income. It helps cover housing, food, health care, utilities, and other essential expenses. Understanding exactly when your deposit arrives and why allows you to plan your bills accordingly and avoid unnecessary financial stress. The annual cost of living adjustment adds another layer of predictability. While the COLA varies from year to year, it is automatically applied based on inflation data. That means your benefit is designed to maintain purchasing power over time. Unlike investment income, which can fluctuate with market performance, Social Security payments are not tied to stock market volatility. They arrive according to schedule, regardless of economic headlines. In the next section, we'll put everything together and summarize the most important takeaways about the February 3rd deposit, so you can move forward with clarity and confidence. 14. Part 14. What your $2,000 plus payment really says about your work history. If your February 3rd deposit is in the $2,100 range or higher, it tells a very specific story about your financial past. Social Security benefits are not random numbers. They are calculated based on your lifetime contributions to the system. The formula looks at your highest 35 years of earnings, adjusts those wages for inflation, and applies a benefit calculation designed to replace a portion of your pre-retirement income. So when someone receives over $2,100 per month, it typically reflects one of three things. First, a strong earnings history. That means you consistently earned solid wages and paid into Social Security throughout your working years. Second, strategic timing. If you delayed claiming benefits beyond your full retirement age, up to age 70, you earned delayed retirement credits that permanently increased your monthly benefit. Third, additional benefit structures. Survivor benefits, spousal benefits, or disability family benefits can increase total household payments significantly. In other words, a $2,100 payment usually represents decades of work, planning, and contribution. And that is important perspective, because Social Security is not a bonus. It is an earned benefit. Understanding how your amount was calculated helps you recognize its value and manage it wisely. In the final section, we'll recap the key points about February 3rd and clarify exactly what you should expect moving forward. Part 15. Final summary. What to expect on February 3rd. Let's bring everything together clearly and simply. If you are scheduled to receive your Social Security payment on February 3rd, it means you fall into one of three categories. You began receiving benefits before May 1997, you receive both Social Security and SSI, or you live outside the United States. For this group, the 3rd of the month is your standard payment date. And since February 3rd, 2025 falls on a Monday, deposits should process normally without calendar adjustments. Whether your payment is $2,100 higher or lower depends entirely on your personal earnings history, benefit type, and deductions. Retirement and SSDI benefits are based on your highest 35 years of earnings. Delayed claiming can permanently increase your benefit. Survivor and spousal benefits can raise household income. And the 2.5% COLA for 2025 has already been applied to current payments. At the same time, remember that your net deposit may be reduced by Medicare Part B premiums, RMAA adjustments, or tax withholding. What appears in your bank account is often lower than your gross benefit. Most importantly, understand your schedule, verify your banking information, monitor your account on your designated date, and contact the SSA if your payment does not arrive within 3 business days. Knowledge removes uncertainty, and when it comes to Social Security, clarity is financial confidence.